What is loan to value ratio? The term LVR is an acronym for loan to value ratio, and it's sometimes even referred to as LTV. They use that a lot in America. I don't know why. Anyway, in Australia, we talk about it as LVR. So the LVR is the amount you're borrowing represented as a percentage of the value of the property that is being used as security for the loan. In other words, the property you're buying or the property that you're refinancing. Lenders and brokers place a massive emphasis on LVR when assessing your loan application because it's a way to look at risk. And so the lower the LVR, the lower the risk to the bank because you're putting in much more deposit really. But how is LVR calculated? Loan to value ratio is calculated by dividing the loan amount by the actual purchase price or the property value and then multiplying it by 100. So in this example, let's say you'd like to borrow 160,000 and that property that you're going to use as security or you're going to purchase is worth 200,000. What you'd then do is, let's get the calculator, you do 160, 123, divided by 200, 123, equals an LVR of, times 100, equals an LVR of 80%. So you get the 160, divide it by 200, the purchase price of the loan amount divided by the purchase price times 100 equals the loan to value ratio. But I guess one common question we get asked is, do you use the purchase price or the valuation? Well, you basically use the lower of the both. So if the purchase price is different to the valuation, the lender will use the bank's valuation when determining the LVR. Now, this is really common in off-the-plan purchases where the value might have increased or decreased since you bought the property or since the contract of sale was dated. The other common situation where the purchase price and the bank valuation is different is when you might be buying a property from a family member at a bit of a discount. They call that a favorable purchase. And again, unfortunately, the banks will use the lower of the two values. So another cool thing you can use here is our LVR calculator. So it works exactly the same. If you have a calculator handy, just put in the loan amount, 400,000. So you want to borrow, and you're going to buy a place worth 500,000. Hit calculate, and it tells you the current LVR of 80%. So that's how to calculate LVR or loan to value ratio. It's pretty simple. In short, you get the loan amount, you divide it by the purchase price, and it spits out a percentage. Really easy. If you've got any other questions, make sure you hit us up at huntergalloway.com.au.